So today we're going to talk about building your personal trading blueprint. This is, and I mean this, the one thing that really separates a systematic trader from a gambler. Why? Because it's a system that's designed to take the two most dangerous things out of your trading, emotion and pure guesswork.
It's a question we have to ask ourselves. And let's be totally honest here. If you're clicking buy and sell because of a gut feeling, a tip you got from a friend, and this is the big one, that fear of missing out, then you might be operating more like you're at a casino than on an exchange. The line that separates the two, it really comes down to one word: strategy.
And this is the heart of the problem, right? Without a plan, every single decision you make is going to be driven by either fear or by greed. A win feels like you just got lucky, and a loss feels personal. And that just tempts you to make even crazier decisions to try and win it back. What we need to do is replace that chaos with some clarity. Okay, so how do we actually build that bridge from gambling over to structured trading? Well, it all comes down to creating a complete strategy for yourself. Think of it as the antidote to all that chaos. It's the single biggest thing that separates the pros from the amateurs.
And that phrase, personal set of rules, it's everything. A real strategy is not something you just copy from the internet. It's a framework you build for you. It's a system that controls every single move you make, when to get in, when to get out, and exactly how to manage your money along the way.
So where do we even begin? How do we start laying the foundation for this blueprint? Well, it all starts with two simple but absolutely critical decisions that are going to shape everything else that you do.
First things first, you have to choose your battlefield. You just can't be an expert in everything. Is it going to be stocks, Forex, crypto? Each one of these markets has its own unique personality, right? It has different trading hours, different costs, different levels of volatility. The key here is to pick one arena, learn it inside and out, and focus all your energy right there.
Next up, how much time can you actually, realistically, commit to this? Your answer to that question pretty much determines your trading style. Are you a scalper, jumping in and out of trades in just a few minutes? Or a day trader, closing out all your positions by the end of the day? Maybe you're a swing trader, holding on for days or even weeks. Look, this isn't about which one is best. It's about which one best fits your life and your personality.
All right, so you've picked your market and you've picked your style. Now we get to the real engine of your strategy. The specific, black and white, non-negotiable rules for when you get in a trade and, just as importantly, when you get out.
Your entry rule is basically your go signal. It's a very specific set of conditions that have to be met before you even think about hitting that buy button. This could be based on technical patterns on a chart, a major news event, or a mix of factors that all line up. The whole point is to make your entry completely objective, not subjective.
And here's a perfect, crystal clear example of what a mechanical rule looks like. Buy when the 50-day moving average crosses above the 200-day. See? There's zero emotion in that. It either happened or it didn't. It's a simple yes or no decision, and that is exactly the kind of clarity a solid rule gives you.
Knowing when to get in is exciting, but knowing when to get out is what keeps you in the game. Every single trade needs 2 exit points planned before you even enter. You need a take profit target, which is where you cash in your win, and a stop loss, which protects you from a really bad loss. A trade without a stop loss is just a ticking time bomb.
Now, this little ratio right here, this is your secret weapon, 1 to 2. It just means you only enter trades where your potential profit is at least double your potential risk. This is the simple math that allows you to be wrong more often than you're right and still be a profitable trader. It's a game changer.
So, we've built the engine, but now we have to talk about the brakes in the steering wheel. This is what many traders will tell you is the single most important part of any strategy. Because without solid risk management and discipline, even the best trading signals in the world will eventually lead you straight to a crash.
This right here, this is the golden rule of survival in trading. Never, ever risk more than 1 to 2% of your total capital on any single trade. That's it. This one rule pretty much ensures that when you hit an inevitable losing streak, it doesn't wipe you out. It lets you live to trade another day.
And discipline? Well, discipline is the glue that holds this whole thing together. It means you follow your plan even when your heart is pounding and you're tempted to break your rules. It means you walk away after a loss instead of revenge trading to try and win it back immediately. And finally, it means you keep a journal. You have to track what works, what doesn't, and constantly get better.
Okay, so now we have all the pieces on the table. You've got your market, your style, your rules, your risk management. You have a complete blueprint on paper. But is it any good? Will it actually work? Well, there's only one way to find out.
Let's look at a complete example here just to make it real. We see every single component we just talked about. The market is stocks. The style is swing trading. The buy signal, the stop loss, the take profit, they're all clearly defined, no guesswork. And the risk? Capped at 1% of capital. This is what a simple, complete, and totally actionable trading plan looks like.
But hold on. Don't just take this plan and start throwing real money at it. You absolutely must test it first. Step 1, you backtest it on historical charts. See how it would have performed in the past. Then, step 2, you paper trade it in a live demo account. You do this without risking a single dollar until you've proven to yourself that it works and that you can execute it with discipline.
And that brings us to our final formula. A complete strategy is your market plus your style, plus your rules, plus your risk management, plus your psychology. You need all 5 of these things working together. If you take even one of them away, the entire structure can just come crashing down. So there you have it. That's the framework, the essential components for moving from a gambler's mindset to a strategic trader's approach. The blueprint is now in your hands. So the only real question left is, what are you going to build with it?